All right, welcome into Market Day Report. This is the last time we're going to get together here, folks, right? So you know what I'm going to say now. Same bad time, same bad channel. Top of the hour, 1 Central, 2 Eastern. Got to stick around for the Cow Guy Close. We got a great show coming up today. You know, we had PPI out, too. We're going to talk. Obviously, we have to talk about that. But our guests are second to none, and they've got all of their own shows on other networks as well. So we got an all-star lineup with some all-star subjects. If you happen to miss it, which is almost inexcusable, but I might let it slide, you can get it rebroadcast, but it's on the radio, and that's going to be at 5 p.m. Central, 6 p.m. Eastern. Rural Radio, Sirius XM, channel 147. And if for some reason you miss it then, well, you can circle back, and if you're still doing your paper route or driving that Uber, 2 a.m. Central, 3 a.m. Eastern, you can get it again on Rural Radio, Sirius XM, channel 147, right? So we'd love to have you. Again, we're having a lot of fun. We're getting a lot of good points across. Cow Guy Close, 1 Central, 2 Eastern, every day on RFD-TV. Let's move along and see how these markets are doing, right? Let's talk about corn. Corn's going to be down by 4.5 cents up front. That's 4.68 even, and that's a penny and a half off the lows, 7.5 cents off the highs. Beef is down 2 cents to 4.91 even. That's 3 ticks, 3/4 cent off the low there, and 5.25 cents off of the high. Right? So that's corn. It's been about where we were, but all day long. If I bring up beans, they're down 6 up front. That's 12.13.5. That's a dime off the lows and 9 cents off the highs. We've had a 19-cent range. We're pretty much right in the middle of it. We've been at Novi New Crop. That's down 7.25 cents to 12.05. That's 4.25 cents off the low of the day, 9.25 cents off the high. Soybeans, there you go. So wheat in Chicago wheat, 14.25 cents lower in July. 6.72 3/4 is last, 5 cents off the low of the day, and well off the highs by, I'm going to call that 24 cents, maybe-ish. We have big range. We were up overnight. Dees, that's down 12 cents to 7.16.5. That's 4.75 cents off the low of the day there, and about 21 cents off the highs. All right, that's wheat in Chicago. Moving from Chicago to the hard red in Kansas City. July Kansas City wheat, that's 6.82 1/4 last, down 17.75 cents, and about 2.75 cents off the low of the day, well off the highs by about 26.5 cents. How about that? Dees down 16 cents to 7.16 1/4. That's 2.75 cents off the low there, and well off the highs by about 25 cents in Dees. All right, so that's hard red in Kansas City. Spring wheat, Minneapolis. Let's go take a look at that. We're down 4.75 cents, well off the lows. 7.33.5 is last there. That's 11 cents off the low of the day, and we got about I'm going to call it 9 cents off the highs. And we've got cotton that was limit down last time we checked, 300 points lower in July to 74.63. Let's bring them in. Ted Seifried, Zaner Ag Hedge. Ted, thanks for sticking around all day long. You might have left early today. Who knows? What are your thoughts here with these prices?
Well, Scott, I feel like what we've got going on for corn and wheat in particular is just a lack of follow-through short covering. In wheat, you look at the strength that we saw the last 2 days, Friday and yesterday, and you feel like that might have been just sort of an exhaustion blow-off high as the funds covered the rest of their short positions. We don't know exactly where they stand, but I think they'd be getting pretty close to flat at this point, or maybe just to the point where they've covered enough. So now we've come back down with that, and corn seems to just kind of want to follow a little bit. I think the planting progress number for corn being better than expected yesterday maybe threw a little bit of a wet blanket on things. But, the fact remains that if you go back to the USDA WASDE report, the new crop balance sheet, the first time we get a look at that on a WASDE report from last Friday, it's a little less bearish than I think what the market had been trading. So, I don't know if corn needs to fall apart here, at least until we get further along into planting and see what weather looks like. But it also just doesn't really feel like it wants to go that much higher. We haven't had that follow through to the strength that we saw on Friday. So maybe we've just kind of defined a range here for the rest of planting. We'll certainly be watching the weather market going forward. If the forecast gets a whole lot wetter, although it is pretty wet, and we continue to fall further and further behind, then, we'll certainly trade that. So back to the weather market. What I think is interesting, though, Scott, is beans are off their lows. I think, if anything, beans have the most reason to be down today. Is China going to respond to tariffs? You take away the soybean oil component of the tariffs, or used cooking oil component of the tariffs. It takes a lot of the strength in the soybean oil away. Do we have reason to be hanging around up here? And again, going back to that USDA WASDE report that we had on Friday, those are supremely bearish numbers. And if we have further delayed planting, that probably ends up in soybean acreage. So I don't see anything to be really friendly about soybeans about right now.
All right, it's a lot of information. We'll take it in stride here. We're going to go away. We're going to digest it. Thank you very much, Ted. We're going to come back after we pay some bills. Talk more with Ted Seifried, Zaner Ag Hedge, right after this. All right, welcome back. Let's talk about some livestock here, right? The four-legged friends, some furry, some not so furry, but we've got live cattle pulled up because I'm in that habit now. Live cattle, look at this board. Well, we're up about almost $3 there. June's up $2.87, 178.45 is last. And that's about, what, 65 cents off the high of the day. Not too bad. Move out to the D, sets up $2.22 to 183.55. And that's about, what, 42 cents off the highs? So not bad. That's live cattle, right? We've got a decent board. How about the feeders? We're up about $4 to $4.50 for $4.40 better in the August. 255.75. Still $1.05 off of the high of the day. You move out to, say, the November, that's up $3.87 to 256.40, and that's 65 cents, sorry, off the high of the day there. That's feeder cattle. Good boards, though, not bad. All right, finally, lean hogs, did they get the memo? They did. They're up 92 cents up front. That's June. 98.40 is last. 70 cents off the highs and about 50 cents off the lows. And we've got October up 40 cents to 84.27, and that, too, is about, I'm going to call that 65 cents off of the highs. All right, that's lean hogs. Let's bring in our guest analyst who's been so patiently waiting in the wings, and that's Ted Seifried, Zaner Ag Hedge. Ted, thanks for sticking around. Anything jump out at you there?
I mean, the feeder cattle, wow. Feeders are the leaders to the upside, and you like seeing that, right? So a lot of feeder cattle, live cattle following along. We gapped higher, cut off were sharply higher this morning before the open. And reversal higher in the stock market. I think those two things combined are giving us hopes that domestic demand will stay strong and that packers margins will be good, or it'll entice them to come in and pay up maybe on cash. But wow, what a strong day! And it's funny because yesterday we started out really rather strong and then gave a lot of it back by the end of the day. So sort of a false start yesterday. But today it seems like we're holding on. So that's really interesting. Now, what I will say is that, with today's low, we kind of hit, or yesterday's low, we kind of hit trend line support, held it, so there is some technical trading going on. Then with today's highs, we're hitting kind of downtrend line resistance. So we're forming a little bit of a wedge here. Whether we'll be able to follow up on a day like today or if we give it all back tomorrow, I'm very, very curious, Scott. Should be interesting. And then for the hogs, wow, talk about up and then down and then up and then down. I mean, you look at some pretty big ranges, daily ranges the last few days, but it's been overall pretty much the same range. And it's all pivoting on the 100-day moving average on both sides. And right now we're sitting right on top of it. So I think this is a level of consolidation for the hogs. Not sure which way we go from here, although it does feel like to me that there might be some more downside despite being up today.
Yeah, all right. Great stuff as usual. Really appreciate it. Thank you very much. Ted Seifried, Zaner Ag Hedge. Thanks, Ted. See you again next week. But bring it back here to Nashville one more time. Hand it back to you.
One more time. Of course, Cal Guy Close coming up at the top of the hour. We're going to break down this and so much more. But these numbers have been interesting, and I'm sure you're excited about the CPI for tomorrow.
We got another big day tomorrow.
Yeah, absolutely. Thank you, Scott.